Greetings traders, Jason here with SwingHigh.com. It is Monday, October 19th, 2009, and we finished at some major resistance today. You see this thick red line I have in here? I'll show you why it's resistance. We go back to October of last year. We see this, the bottom of this huge candlestick and the start of this other huge candlestick. It's actually a gap down on some charts. That 110 area on the spiders is going to be proving to be a huge resistance area. After that, we see this 120 area as a logical place of resistance, and we'll talk about that in a second. Let's go to a small time frame here and look at the intraday action. This morning we opened kind of flat and then just took off. And once we hit 110, we basically stopped and traded sideways for the rest of the day. There are a couple good tests of 110, which is good to see. And volume was okay today, wasn't great. We're still seeing light volume compared to normal. And one important thing that I want to draw your attention to is, even though we are sitting under this huge resistance line, we're testing away this thick maroon line I have drawn in from the monthly, which is kind of good. That supports the bull case right there, and if we do break away from that line, we could see another significant run. We are also back into the rising wedge formation. I mentioned on Friday how we broke out of it a little bit, but we are now back in it, so it's not a breakdown, and that is also bullish for the time being. Let's look at some of the market internals. The VIX sold off nicely today. At one point we were under 21, which is very bullish, and we finished under 22, which is also very bullish. As I would like to see the VIX bleed out a little bit more, but as long as it's going down, I'm happy being long. Let's look at the tick and the trend. The tick spent most of the day above zero, which is understandable because we did see an up move today. Here's this red line. This is your zero line. And the trend at 1.2 is a little bit bearish, and I'll tell you why. The trend measures volume flowing into stocks, and if more volume is flowing into stocks on the decline, the trend will be higher than 1. If more volume is flowing into stocks on the rise, the trend will read lower than 1. 1.2 to 1.6 is a stable bearish trend reading, and 0.8 to 0.4, I want to say in that range, is a stable bullish reading. So at 1.2, this means that more volume was flowing into stocks on the decline today than was flowing into stocks on the rise. So that's a little bit bearish of a reading. Tonight, of course, we have Apple coming out and reporting earnings. They usually beat the street, and they usually give a good reason to buy stocks. They usually come out and beat estimates, but you never know. They could disappoint, or this could be a classic buy the rumor, sell the news situation where today traded up in anticipation of Apple's earnings, and then no matter what they say, even if it's good, we could see a sell-off overnight. On Tuesday, look out for Caterpillar, Coke, DuPont, Pfizer, United Technologies, and Yahoo reporting, as well as housing starts and the producer price index in the morning. Wednesday, we have Bank of America, Wells Fargo, Morgan Stanley, and Amgen. Thursday, we have 3M, Merck, AT&T, Travelers, McDonald's, and American Express, as well as jobless claims. Friday, we have MSFT, that's Microsoft, Honeywell, Schlumberger, and home sales, all being reported. So this week we have a lot of big earnings coming out that can move the markets, as well as a lot of important economic reports. I did not take any trades today. It's hard to go long in this environment when we have such a huge run-up and we're at such major resistance. I'll talk more about that tomorrow. Thanks for being a part of SwingHigh.com, and I'll talk to you later.